Crypto is getting wrecked right now, and it's because the bond market is getting absolutely shook right now. Today in this video, we're going to be talking about the 10-year treasury, specifically the US 10-year treasury, why it matters so much, and how that affects crypto as well. All right, so today in this video, we're going to be talking about the US 10-year treasury. All right, and I'm going to be trying to explain it in, I guess, a very simple way. But first, we're going to talk about why you should even give a shit and watch this video, okay? Because that's the most important thing, why it matters. Why it matters for your shitcoin bags, basically. So, just to, make this a really, really easy way to explain it, the bond market is where the biggest money is, okay? The bond market's where the biggest money is, then stocks, then crypto. Crypto, you got to realize, including Bitcoin, is a very, very, very small piece of, I guess you could say, in a big pond of water, we're like a small drop. So crypto is tiny, tiny compared to the bond market. That's absolutely huge. Now, when there's issues in the bond market or things are happening, this scares equities, aka stocks. And when equities get scared and start to sell off, crypto, which is the most risk-on asset class, gets absolutely shook and sells off the hardest. In terms of risk off and risk on, crypto is the riskiest asset class. Bonds are seen as the safest assets you can buy. All right. So when there's problems in the safe area where the most money is, it trickles down and goes to equities and then makes its way to crypto. And when it hits crypto, crypto gets hit very, very hard because it's the most volatile asset class. It's the smallest and riskiest. It's the first one that's going to get sold off every single time when there's turmoil in the markets. All right, so that's why you should give a shit about the bond market, because the bond market can, yes, affect your crypto a lot. So you should care about bonds and, watch this fucking video to get educated if you don't know what a 10-year is. We're going to try and keep this pretty basic, but if you take a look at what's going on in the US 10-year right now, it has been on, rising, and things have been getting kind of weird lately. Now, two really surprising things that have been happening internationally, which has really shook the market, is the German 10-year has been absolutely rocketing, if you look here. And the Japanese 10-year has also been going high as well. But what's happened with the German 10-year has been absolutely insane. If you take a look at this huge spike right here, has kind of put the market in, a scary position, all right? And a lot of this stuff is happening because geopolitics and the things Donald Trump has been doing. But now let's get straight to it. Let's talk about the 10-year Treasury bond yield, what it is and why it matters. Shout out Investopedia. We're just basically going to be going over this document. And yeah, the 10-year Treasury bond yield is the interest rate the U.S. government pays to borrow money for a decade, serving as a benchmark for other interest rate and a key indicator of investor sentiment about economic conditions. All right. So kind of back to what I was saying in our little whiteboard thing, the bond market is really where the sentiment comes from. Okay. If the bond market's out of whack, everything else is going to be out of whack. All right, that's like just a general way to think about it in a simple way. All right, it matters because it influences borrowing costs, impacts the valuation of financial assets, and signals expectations about inflation and economic growth. So very, very important, basically. Key takeaways: Treasury securities are loans to the federal government whose maturities range from weeks to as many as 30 years. Treasury securities are considered safer investments relative to stocks because they are backed by the U.S. government. Back to what I was saying over here, it is considered the safest investment you can make is a 10-year treasury, or just, government bonds in general. As it says, relative to stocks, and I'm sure it's, as we know, crypto is a lot more riskier than any other asset class, so considered a lot more safer than crypto. Bond prices and yields move in opposite directions, which means falling prices boost yields and rising prices lower yields, okay? The 10-year yield is used as a proxy for mortgage rates and is also seen as a sign of investor sentiment about the economy. Just more things about why it's important. A rising yield indicates falling demand for treasury bonds. And if you take a look at what's going on with the 10-year right now, the yield has been rising. So I guess the sentiment for the US 10-year is kind of, means people are selling off. Now, what I think is happening right now is that internationally, I think countries are looking kind of to sell off the US treasuries right now. And that's what's causing this. That's, purely me just thinking speculative, but I think that's really what's causing it right now, because if you take a look at equities have been getting hammered too. And normally when equities get hammered, it means people are going to flee to the 10-year. But they're not fleeing to the 10-year. It's getting dumped. The 10-year is getting dumped, which is causing a lot of turmoil in the market. But anyways, let's go back to the 10-year here. Let's go back to Investopedia. Understanding the 10-year Treasury bonds. The importance of the 10-year Treasury bond yield goes beyond just understanding the ROI for the security. The 10-year is used as a proxy for many other important financial matters, such as mortgage rates. Basically, you should give a shit about it for your other bags. Even if you don't own 10 years or you don't really care about how it operates with the loans, blah, 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 you should care about it because it affects your other investments, all right? This bond also tends to signal investor confidence. The U.S. Treasury sells bonds via auction and yields are set through a bidding process. Prices to this 10-year bond drop when confidence is high, which causes yields to rise. But the weird thing is, right now, confidence is not that high, which is where things are getting interesting. This is because investors feel that they can find higher returning investments elsewhere and do not feel the need to play it safe. But as we see right now, crypto and stocks are dumping and U.S. Treasuries are getting sold off too, which means it's probably international pressure on the U.S. Treasuries. Just what I'm thinking. When confidence is low, bond prices rise and yields falls as there is more demand for the safe investment. Put simply, falling yields indicate caution in the markets. This confidence factor is also felt outside the U.S. as it points to the future of the global economy. The geopolitical situations of other countries can affect U.S. government bond prices as the U.S. is seen as a safe haven for capital. This can push up prices of U.S. government bonds as demand increases, thus lowering yields. All right. And you can think about this right now, changing 10 years yields over time. And it talks about a little more about this stuff. So let's go down to this. This is where it gets pretty important to the 10-year Treasury yields. Here are some more important factors related to 10-year Treasury yields. Benchmark interest rates. 10-year Treasury yield serves as a benchmark for a wide range of interest rate, including those of mortgages, corporate bonds, and other loans. That's a lot of fucking money. So very important. When the yield on the 10-year Treasury rises, borrowing costs across the economy typically increase as well. This affects everything from consumer spending on big ticket items like homes and cars to business investments and new projects and expansions. When the yields fall, it lowers borrowing costs, which can stimulate the economy. Indicates economic health. The yield on the 10-year Treasury is a key indicator of investor sentiment about the economy's future health. A rising yield often suggests that investors expect stronger economic growth and higher inflation, which prompts them to demand higher returns. All right. A declining yield indicates that investors are seeking safety amid economic uncertainty, which can be a sign of anticipated economic slowdown or deflation. All right. And there's a couple more of these. We're going to go over them. Impacts financial markets. The 10-year Treasury plays a part in the valuation of financial assets. It is commonly used as a discount rate in models that value future earnings and cash flows. When the yield is low, it can boost stock prices because the present value of future earnings is higher. A higher yield can lead to lower stock valuation as the cost of capital increases, making equities less attractive compared to the risk-free return on government bonds. Okay. And, something that's kind of interesting is when you think about it is the U.S. has kind of been seen as an international, safe haven for some countries. And now that we're taking a more nationalistic approach to the way we're going to be operating here under Trump, it's kind of scaring off some of the globalists, you could say. Now, personally, I'm a fan of what Trump's doing right now. I'm a nationalist. I'm not a globalist. But I could see why this is causing, the moves he's making are, causing turmoil in the markets. Because there's a lot of countries are invested in the U.S., basically. The 10-year Treasury yield is closely watched by the Federal Reserve and other central banks as part of their assessment of economic conditions. It helps guide decisions on setting short-term interest rates and other monetary policy measures. A rising yield might prompt the Fed to raise short-term rates to prevent the economy from overheating, while a falling yield could lead to lower rates to support economic growth. And that's where things are going to get really fucking weird because, as it just said there, we are in a weird situation where the Fed right now is trying to fight inflation, but Trump also wants interest rates lowered and yields on the 10-year keep going up. So is Powell going to look to raise interest rates right now while Trump's, trying to get it down? We'll see what happens. Drives global investment decisions. As a safe and highly liquid investment, the 10-year Treasury bond is a pretty big part of global financial markets. Its yields influences investment decisions worldwide, affecting capital flows between countries. For example, higher yields attract foreign investors seeking stable returns. He might have otherwise kept their capital in their domestic country, and that's something that's interesting because the yields on these other bonds could become more attractive than the 10-year at some point. All right. So, and then down here it talks about the factors of the 10-year, etc. And I don't want to kind of I think for the point of this video, most of my, pretty much everyone here is not a bond guy mostly. A lot of you guys are probably crypto guys and stuff like that. So I'm trying to kind of make this why you should give a shit about this right now. I'm kind of, it's kind of a weird thing because the sentiment now on a lot of CT is the fact that, Trump's on purposely going to try and crash the economy to fire up the printers and lower interest rates and everything. And I always get kind of a weird feeling when everyone on crypto Twitter is kind of aligned on a thesis. It feels like it's not going to happen. I don't know. Maybe I'm wrong. But that's kind of been my thesis on the whole thing is, yes, Trump is going to basically on purposely try and cause an economic collapse in the U.S. to then go to Powell and say we need to lower interest rates and stop QT and begin mass QE. Elon Musk is also influential in this administration, and we know Elon Musk benefits when there's lower interest rates. His company Tesla does, SpaceX, etc. All right. So yeah, we're gonna see how it all plays out. At the end of the day, literally nobody knows what's gonna happen. But this is kind of something very, very important that you should have always. This is something you should know by heart if you're an investor in general. This little diagram that I have here should be in your head. All right. But anyways, if you enjoyed this video, make sure to give it a like, leave it a comment, let me know what you're thinking, and also go follow me on X at @AaronBremser_. Go follow me on X @AaronBremser_. Go subscribe, and yeah, thank you for watching.